Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this July 12th. So ahead of the CPI number, what we have seen today is the completion of this head and shoulders formation. We have met the fully measured move to the downside that we were discussing yesterday. So interesting price action ahead of the CPI reading tomorrow. I think the reason why we're seeing a late day sell-off is because if you remember the last CPI reading, it came in and surprised the markets and led to a late day sell that just continued all day long. Now the markets were initially they opened up strong. You can see this massive move up, had a big surge up in the morning. It looked like we were off to rallying. And then we started reversing and we started making lower lows. And you tried rallying, recapturing that high, but you started making a series of lower highs, this downward move over here. So that was our indication that we were potentially underwater and going to see more downside throughout the day. This is why we accumulated more shorts, specifically 4 new short positions that I do believe will be decimated over the coming months. That being said, if we look at the price action, you had your rally, you had your sell-off, you had an attempt to recapture, flagging sideways, and then the selling just commenced late in the day. You are getting a nice bounce over here, which is partially some short coverings and maybe potentially some people trying to accumulate some long positions. So the interesting part about where we have hit, you have found support right over here. So let me just draw a trend line across these lows. So what's significant about this area is this was your original breakout zone where you came up, you retested the original breakout zone. This was your retrace back to your support, and then you broke out. So this is a big level that the S&P has to hold if we want to see more upside. If we break that, then there's honestly not a lot of support up until we carry out this trend line, which you'll find some support. It may coincide with this gap fill down here. So for the bullish bulls out there, you really want to hold this level. A close above this line will indicate that we potentially can still move up. I do want to eventually see this gap filled to the upside, but now that we've had a nice measured move down, we've fulfilled the head and shoulders formation that triggered, and we've met the fully downside move. Obviously, there's still about 10 minutes left in the day, so it'll be interesting to see where the S&P 500 closes, but you are into some support and you are in a short-term oversold condition. If we flip to the Nasdaq's a very interesting chart. Also under pressure. I think the big stock of the day is Microsoft out of the mega caps. It has seen significant downside pressure, down over 4% on the day. It is catching a little bit of a bounce now, but overall big cap tech was strong and then it just faded throughout the rest of the day. So that being said, if we look at where we're hitting now on the Nasdaq, it's a really interesting trend line that I want to show you guys. So if you simply carry this trend line all the way forward, look at what we just tagged here. If we connect the pivot highs over here, you're now coming close to support. You have a little bit more downside before you hit a decent level of support to the downside. So I do think that this level will potentially hold when we hit it. A lot of people are preparing for a higher CPI reading tomorrow. Roughly, analysts are expecting a 8.8% consensus. I'm in the camp that actually it's going to be lower than that. It's hard to pinpoint a number, but I think the analysts are prepping for too high of a number, and I think it's going to be more or less in the range of 8.2, 8.3%. There is a probability that we could see even maybe a 7.9. If the CPI reading comes in lower than expected, then that should give the markets a little bit of a bid. And at the same time, if the inflation number, the CPI, comes in higher than expected, that's going to be, again, negative for the markets, because I do think that means the Fed still has to aggressively tighten and potentially speed up their QT process. So we are coming into support. Let's flip to the daily chart on the SPY just to see what technical damage has been done. So overall, It's a pretty anemic day in terms of volume. 47.5 million so far. Yesterday we closed with 58 million. So it's looking like we're going to close extremely low in terms of volume, which means that many people are just waiting on the sidelines, waiting for all this economic data to be released before they allocate and put capital to work. The interesting thing is we are holding this reversal candle over here. This is your main reversal candle that I'm watching, and we do not want to start taking out that on the low here on a closing basis, because that is your highest level of volume that occurred in the last few sessions, and that's your real big area of support. If you break that, you head likely down to this downsloping trend line, which should coincide with this gap fill, and it would also coincide with your longer term channel that I do believe we will enter at some point in time. So overall, the resistance has been clearly showing its signs of strength up here as we failed on 2 attempts to try to get through. One could still argue we are bullishly consolidating still for a potential move up. I still think that with a lower CPI reading tomorrow, the markets can get that bounce that we're looking for. Ultimately, it looks like we are going to close positive above this previous support level. So in the short term, that is a bullish sign. And I do think that we can see a potential positive day tomorrow, providing that economic data doesn't come in worse than expected. If we take a look at oil has been getting smashed. I mean, just on our SEO trade, we have brilliantly called a short, a retrace to the breakdown zone. We were watching this level. We had it prepared for several days. We even talked about that initial game plan. When we get the retrace to that level, we accumulate a short position. And look at our SEO trade. I mean, a lovely, lovely, beautiful, up 13% today. I still think oil has more downside. You know, we could see a bounce, but overall, we're starting to flirt with that $100 a barrel level more frequently now, under $100 a barrel more frequently now. And the fact that you weren't able to recapture this channel over here, I do think oil is going to start making lower lows on the chart. The big level to watch is going to be this level over here. This is pretty much your hard dump sell-off, which we're flirting with right now. If we break this level and confirm, I think we have a pretty quick move down to the $84 barrel. And that would be another, let's just say 9-10% drop from current levels. Natural gas is interesting price action too. Jumping on the 4-hour chart, you can see you were trading in this parallel channel. You've broken that, and you've now officially, you haven't confirmed, but you are looking to start closing below that channel. If you start closing below this channel on a confirming basis, then potentially natural gas could see its another leg down. Let me just take this channel away. Overall, natural gas is still technically on the daily chart holding this bullish consolidation. You're still in and amongst this wide range green bar, and you're still pretty much trading at the highs of this original pop. So to me, I still think natural gas has some more upside before I'm comfortable pulling the short. That being said, if we do get a pop into the $6.80 or $7 range, look for a short trade to be issued. Let's take a look at gold. Let me just see how the spider's doing. So it's still getting that little bit of a float. Let's just take a look at gold. Gold is still under pressure today. It hasn't really done much. You can see if we flip to the daily chart, it's still making a little bit of a lower low today. You are coming into some key support zones over here. So around the 1720 mark is a pretty big level. I do think that gold can still test the low range of this channel. That's where I'm looking to buy and add to our next GLD position. So I'm actually hoping that gold has a nice flush down for us to start accumulating a larger GLD position. If we look at why the gold is still under pressure, once again the US dollar surged up. It had a little bit of a pullback, but now it's making the spinning top doji, which is more or less a neutral stance. But if you look at the intraday action on the US dollar, the interesting price action is what we can start to see is potentially, and I mean potentially, you may have this intraday head and shoulders. So what we could see is this is your left shoulder. This is going to be your head over here. This is just a quick rough drawing. And if we start to curl over potentially tomorrow, we could see an intraday head and shoulders topping formation, which should send the US dollar back down to these support levels around 106. Obviously, if the US dollar starts falling, that will propel the equity market as well as gold to see some overall strength in the market. So I do think if inflation comes down, we may start to see the US dollar put in this intraday topping formation, which could send it briefly lower in the short-term period. So that's kind of what I'm expecting. I'm actually expecting a positive number tomorrow on the CPI, and then markets should see somewhat of a little bit of an upside rally. That being said, I know we are net short the market. We still have quality longs on the table that I do think will bounce enough to offset our short positions. But I do think the overall macro trend is still going to eventually have a sharp turn to the downside. I mean, for all we know, tomorrow's CPI reading could start the next down leg, and that's why I am on the short side of the market for the time being. So if we take a look at the US 10-year yield, notice how we also may have a topping formation. It's too premature to call this a head and shoulders, but what I am watching for is you have a left shoulder over here, you have a head over here, and I'm looking for that right shoulder formation. So we have not, and we do potentially have a neckline forming over here, which could coincide. If you get a break in this neckline, it should send you back down to this 2% mark. Overall, if yields continue to fall sharply, and if gold continues to sell off, I'm still waiting for that signal. This yellow trend line over here, let me just flip to the weekly chart. This yellow trend line over here, this is going to be the big level to watch. If we break this level, or sorry, when we break this level on yields, look out below. That's generally going to signal, that's going to be your credit market or your bond market signal that a potential liquidity crisis or a flash crash or black swan event is going to lurk. We generally get a signal before the overall equity markets do start to tank. So that's what I'm watching. We break this, and I'm going to look to accumulate heavily on the short side and liquidate our longs. You know, just like we broke this over here, you had a signal to prepare for a nasty drawdown. Same thing over here. You had a signal to prepare for a nasty drawdown. Same thing over here. Signal, nasty drawdown over here as well. So there's tons and tons of cycles. It's really a 100% clear indication that when you break these key upsloping trend lines that rates have had, it's never a good sign for the equity and bond markets. So we'll just have to continue to monitor that. Let's just flip to back to the S&P 500. So with 6 seconds left, we are closing above that support level. So in the bullish short term, despite this being a down day, it does favor somewhat of a positive move heading into tomorrow, providing that economic data is good. So discussing what we did today. We accumulated a short on Kellogg, so the ticker is K. Let's just review some of these, alerts. So we shorted this at 73.93. You can see it has a beautiful reversal, almost actually it is a topping tail over here, followed by another topping tail over here. So one of the reasons on a daily basis why I pulled this short is because you had a retrace of this original double topping tail formation. So you have two signals right there. And then if you flip to the larger time frame, the monthly chart, I just want to show you this. This is what really caught my eye. You have this potential, you have this major long-term double top scenario going all the way back to 2016. And then you also now have this potentially failed breakout on a monthly chart. Not only are you on a double top long-term resistance point on the chart here, you're also on a monthly time count. You've had 1, 2, 3, 4, 5, 6 months to the upside. Plus on the daily chart, you're screaming reversal signals and daily reversal signals. So there's clear distribution happening at this level on Kellogg. And there's not many charts that are trading at their all-time highs in this cycle. I do think it's only a matter of time as the consumer spending starts to slow down. Yes, Kellogg's is a cheap cereal company and they make, a whole variety of consumer staple products. But that being said, I do think their sales will be impacted over the coming months. If we also take a look at Procter and Gamble, so notice how we're starting to short the consumer staple stocks. So Procter and Gamble has had a nice, beautiful reversal. One of the reasons I shorted Procter and Gamble is you had a beautiful, so this is your original neckline kind of trigger. It's not a head and shoulders, but you do have this M-top formation. If If anybody knows anything about M-tops formation, they're extremely bearish. You can calculate downside roughly the same way as head and shoulders patterns, and you can clearly see you had this beautiful neckline over here, which was broken to the downside. You had a retrace, and then you fell even more. You've hit basically another trend line over here, which is now going to be your next big support level. But you've had a secondary opportunity, a retrace back to the original breakdown zone over here, where you have tons of daily moving averages beating down on you, and now you're starting to reverse off that level once again. Notice how you're into this wide range red bar. It's going to take an exceptional amount of buying pressure to get through that wide range red bar, and I don't think that Procter and Gamble is going to do so. As we head into a weakening economy, and as unemployment upticks over the next 6 to 12 months, which it will, we're certainly going to see the likes of these stocks get hit. They have been more or less the leading stocks where institutions have been hiding because people need their toothpaste, they need their Procter and Gamble products, it's their staples. But it doesn't mean that people are going to continue to buying the same amounts that they have been buying. We also shorted NEE, so this is another energy play. Utility play. You can see it's had a nice reversal off of our level. You had a retrace back to the 200 daily moving average, which is one of the reasons why I executed this short. Not only did you have a retrace there, but you're having major distribution signals occurring once again. You do have a negative divergence as well occurring in this chart. And then when you factor in the PE of this stock, I mean, for this company to maintain its PE it's over 100 PE. Typically, the last tightening cycle sent this stock, I think, in 2018 with a PE of 18. So when you're trading at a PE of over 100, it's mathematically impossible in my brain for this company to continue generating and making revenue and profits at the rate that the market is pricing in. And yes, it's a place that people have been hiding, but you can clearly see with these massive sell-offs all throughout the year that institutions are dumping. You know, other people are buying it up. Institutions are dumping. The clear sell pressure is a lot heavier than the buying pressure. And you are into this resistance trend line over here. It's really kept you in check on the last, 1-2 rallies. So tons and tons of resistance. In terms of where I think this stock goes over the longer term, I have it priced in that we're going to at least see 55, and then we'll have to reassess from there. But overall, on a monthly chart, you can see these massive down days showing you the immense pressure that is occurring on these charts. And the interesting thing is that on a monthly basis, you have really never confirmed above this topping tail. You had a little bit of price action over here, but overall you've never confirmed, which shows you that there is potentially a cycle top in play with this company. So let's just continue to accumulate the shorts on the market at quality technical levels. Ultimately, this will have a harsh drawdown as soon as that economic GDP numbers come out and as soon as the Fed continue to tighten and tackle inflation. Overall, that's it for today's video. I'll update you on more of the balance sheet and some really interesting charts that I have been putting together over the last couple days. But thank you all for being members. It was terrific. Another positive day for our portfolios since the markets were down. So we just continue to see growth in our portfolios as most investors are still being decimated in these markets. But overall, let's wait and see what happens at 8:30 with that CPI number. I do think we have a bunch of energy data as well. So potentially the oil market could be foreshadowing that data, those inventory builds, are going to be a lot more negative than what the market was anticipating. And this is what we've been screaming for months and months and months now, is shorting energy. And once again, it's looking like we're going to make a tremendous profit on our energy trade. We have rinsed and repeated energy multiple times this year. So congratulations if you stepped up, you put your emotions aside, you stopped listening to the media that were so bullish on this, and you trusted the charts, you trusted the technicals, and you trusted the macroeconomics that back up our technical analysis. So thank you all for being members. Please give this video a big like down below and stay tuned for more